Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Manila is again one of the least safe cities in the world after slipping 8 notches in a biennial ranking released by the Economist Intelligence Unit. The Philippine capital ranked 51st out of 60 cities in the 2021 Safe Cities Index. That's down from 43rd place in 2019. In 2017, Manila ranked 55th. Now, the index ranks cities according to 5 security factors: digital, health, infrastructure, personal, and environmental. Manila tumbled the most in personal security, that's falling by 15 spots. It also fell in infrastructure, digital, and health security. The ranking said health security must be revisited due to the pandemic, noting that a holistic undertaking of urban health must be undertaken. Copenhagen in Denmark is this year's safest city in the world, followed by Toronto, Singapore, Sydney, and Tokyo. In Southeast Asia, Bangkok, Ho Chi Minh, and Jakarta also fared better than Manila. Now, the health department admits there is growing evidence that community transmission of the Delta variant is already happening in NCR and Calabarzon. Recall that the Philippine Genome Center and other infectious disease experts already said there is no other way to explain the surge of cases in the past few weeks other than this community transmission. Still, the health department is shying away from official confirmation on this matter. But with nationwide cases still rising, the agency is reiterating the need to fast-track the rollout of vaccines. Health Undersecretary Maria Rosario Vergeire has also conceded that wide-scale lockdowns are no longer the best way to contain the spread of COVID-19. She said longer, granular lockdowns should be more effective and more advantageous to everyone. Let's kick off the market report with a quick health check on our local unit. You can see on my terminal here the peso trading at 50.190 to the greenback. Incidentally, very interestingly, it has risen to the highest in more than 2 weeks, even before the government had submitted its proposed 2022 budget to Congress. It's actually touched the lowest since August 5th. This, according to Jonathan Ravelas, he's the chief market strategist at BDO. We will likely be consolidating at a range of 50 to 50.50 in the near term, saying that the 50.50 levels remain a strong resistance level. Now, let's take a quick peek at our global markets here as we open the markets 3 minutes into trade. Markets are in a much more optimistic mood, and you can see that happening over in Wall Street. The S&P 500 closing at 0.9% overnight, together with the Dow Jones and the Nasdaq jumping by 1.6%. Now, this, according to investors looking over at global stocks, they said that markets are in a generally more optimistic mood compared to the doubts of the pace of recovery, which were prevalent last week. They also did mention that even as there are risks to the Delta variant, that might also raise questions of whether the Fed will be holding off, signaling a taper timeline. Another thing that was also very strong, gold. That was the highest in more than 2 weeks, and Bitcoin was trading at about $50,000. Now, let's take a look at Asia here. Also largely in the green, quite a surge compared to what we were seeing last week. The Nikkei 225 up by 1%, Shenzhen up by 2.4% this morning. Let's see if our own bourse is holding suit. It does seem to be the case, back at 6,600 levels. That's a jump of 0.7% in the first 4 minutes into trade. That's after having slipped yesterday to 6,500 levels. Let's take a look at the sectors that are holding the fort. You can see property is up by 1%, followed by holding firms up by 0.8%. Only services really and other non-classified sectors are not enjoying this rally this morning. And finally, let's take a quick peek at our movers here. You're going to be seeing LTG up by 1.6%, followed by Ayala Land and SM Investments. So quite a mix of property players and holding firms, as we mentioned. And sitting out this rally is Metro Bank, which was one of the best performers yesterday. That has gone downwards by 0.5%. And finally, just a quick peek at one specific stock, that is DMCI, jumping by close to 1% this morning. This, as they have announced that they will be investing 3.5 billion pesos to develop two off-grid projects. So that's going to be 15 megawatts of a thermal power plant in Nara, Palawan, and a 12 megawatt hybrid solar diesel plant over in Masbate. The commercial operation target of that plant in Palawan is the first quarter of 2022, whereas the 15 megawatt plant in Masbate is going to be online by the second quarter of 2023. DMCI trading at 6 pesos and 13 cents. Let's check in on the biggest headlines we are watching this morning. Let me just check that in. Okay. Play to earn games like Axie Infinity might soon be included in the country's tax registry. The Finance Department told the Philippine Star that regulators are now assessing how they can put up a registration system for non-resident foreign firms like Axie Infinity in an effort to capture the burgeoning crypto deals in this country. The department added that users of play-to-earn games are mandated to report as income and pay taxes for whatever they generate from crypto platforms. Meanwhile, the Customs and Internal Revenue Bureaus are tasked to collect over 3 trillion pesos in duties and taxes next year. That's in order to finance the government's 5 trillion national budget. This collection goal is 15% higher than the combined 2.7 trillion peso target this year. The amount will also make up almost 100% of the projected total tax revenues for 2022 to the infrastructure sector in this year's budget. The executive branch on Monday submitted the record 5 trillion peso national budget to the House of Representatives and the Senate. The House will start budget deliberations today as they target to have the 2022 National Expenditure Program approved by the end of September. Now, all eyes are on that 2022 budget proposal, with the current one beset with red flags. And here to weigh in, we have Professor Emmanuel Leyco. He's the president of the Pamantasan ng Lungsod ng Maynila. Good morning, Prof, and welcome to Businessworld Live.
Good morning, Danie, and thank you for having me back.
Sir, let's kick off with this amount of the proposed budget. So 5.02 trillion pesos at a time when our GDP is more or less in contraction, a little bit of recovery there in the second quarter, but nevertheless, compared to pre-pandemic levels, way far off. Is this amount realistic? Where will we get this type of funding? And is it okay to be operating on such a high deficit?
I think it's quite obvious that the sheer value of the proposed budget is quite high, and people will raise concerns. I am also concerned that the revenue budget may not be achieved. And also in terms of the assumptions that are being made, assumptions that have been revised, I think the deliberation on this budget will have to focus on whether or not the assumptions about the macroeconomic trends or the macroeconomic levels of the country will be achieved. For example, they have already reduced the targeted growth rate for the GDP. So I look at the proposed budget, it was still reflecting somewhere like 6% or over. Yes, exactly.
Okay. Sir, they are saying, though, that the budget deficit will be narrowing by next year. This year, they're projecting 9.3% of GDP, and next year, 7.5%. Do you see this happening, this type of recovery by next year? Are we going to be able to fund this, at least if the budget is actually, the deficit is narrowing naman?
Well, it is possible if the government is able to achieve the revenue targets. But the rate we are going right now, with businesses slowing down, contracting, and some are even closing, I am apprehensive. I am not exactly convinced that the revenue targets will be achieved. And therefore, will it result in the narrowing of the deficit? I doubt it. And that will have serious implications if we are not able to perform within deficit targets, within revenue targets. That will have very serious implications on the country.
Sir, what catalysts are you specifically looking out for here to determine whether we will be meeting that revenue target, or we will at least be spending as programmed and not exceed that? Are you looking at the healthcare aspect, the consumption aspect, or other sources of revenues like borrowing, even domestic and foreign?
Okay, a number of factors I think we have to consider here. First is that whether or not the businesses are able to reopen. Are they able to create jobs? If they are able to create jobs, there will be more people buying and more suppliers bringing the products to the market. However, if businesses are not able to open because of concerns about COVID, because of lockdown, because of the ECQ, I don't believe that can happen. So where do we look? Uh, Perhaps the government is already looking at foreign borrowing, but that will also have serious long-term implications and even short-term. Uh, Remember, the debt service is a mandatory item on our budget, and right now it is already like 10% of the proposed budget. That could even increase if we increase the debt levels that we are going to bring in. So the government really is in a very, very tight ship right now. You cannot make an assumption that the businesses are going to reopen when COVID virus pandemic is still affecting the movement of people, movement of goods and services. I think that will be a very, very dramatic variable that will create serious implications on our economy. Now, if you are not able to generate revenues within the country, you borrow. But then, while the government is still saying that we are still at that level where we can afford to borrow, that is short term. Right now, perhaps we have not arrived at that level where credit last quarter. I think more realistically, we should be targeting 20 upward percent
Okay.
growth rate to be able to go back to the previous rate. I think that is going to be problematic for the
Okay.
country.
And highly scrutinized at this point in time, especially with the plans in the budget this year. Sir, question: in terms of the split of the budget, do you see enough percentage going to the health sector vis-a-vis the 1.818 trillion they are putting for the build, and how the amount for infrastructure was actually spent in this current pandemic year?
I think given the requirements for us to manage COVID-19, I believe, what was that, 100 something billion peso budget for healthcare is not nearly enough. Perhaps it's enough to do the same thing that they were doing before, but then 157 billion in the midst of a pandemic, that kind of spending is not going to be enough. Now, we need to look at where the DOH budget is going. If it is only going to the previous operating expenses and then bringing in some additional healthcare workers, I'm not sure that will be enough to manage the COVID-19. In fact, I believe that during this pandemic, healthcare and economic relief fund should be the top priorities of the government budget at this time. But then that is not exactly so. We continue to do build spending, but then I thought last year they were talking about resetting, recovering, and bringing the country back to where it was before the pandemic. Obviously, the budget did not do that. And so, how are we going to achieve a recovery? I think this budget is being labeled as the legacy budget. I don't think they should talk about legacy when the people are talking about getting back on their feet. No, we are not talking about legacy here when people are out of work, when
Okay.
businesses are closed, and the government spending program is under scrutiny by no less than the state auditors. And I think that will present a major challenge for the government to defend its budget in Congress.
Sir, if that is the case, would a reenacted budget be better than enacting this five 5 trillion budget, which you say might be risky in terms of amount?
That is terrible. Reenacting a budget that was poorly managed, that was poorly implemented, like we are seeing now. For example, the risk allowance of the healthcare workers are not being distributed. I think the implementation is a major problem in our budget. It's not so much that we don't have enough money, but I think implementation and items on our budget, the allocation should be reworked out and be guided by realities now. People are out of work, and an economy that is consumer driven, when consumers are not spending enough, you can expect that the economy will slow down or will even contract. The problem now is, are we looking at a double dip growth or double dip trend in our economy? We did 11.8%, but mind you, 11.8% did not bring us back to the pre-pandemic level. So we should be looking at perhaps 20% just to bring us back to where we were before, and that will be recovery. Now, the economy, the budget, if it's reenacted, I think that will mean another disastrous fiscal year for the country. We need to
Okay.
pass the budget, but we have to make sure that we have the right budget.
Okay, there you have it. Of course, we need to pass the budget on time. We need to fix the inefficiencies that we've seen in this past year, but of course, still a lot of risks there on where we will be getting this funding for the budget deficit. Thank you so much. It was, of course, Professor Emmanuel Leyco, President of the Pamantasan ng Lungsod ng Maynila. Salamat, sir.
Salamat, Danie. Thank you.
And that's a first look into the business day. Today is Tuesday, August 24, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.